while being slightly fast-paced. The current stock price for BigBear.ai Holdings Inc. BBai stands at $7.29, reflecting a 0.00% change from its last close, as the market is currently closed as of October 9, 2025 at 9:27:04 a.m. GMT4. The sheer fact that this stock is trading at over $7 a share, having endured a catastrophic revenue guide down just 2 months ago, is the hidden narrative few retail traders are paying attention to. It reveals a deep-seated institutional belief in the company's future beyond quarterly noise. The general expectation surrounding BigBear.ai right now is a tug-of-war. On one side, you have the AI hype cycle pushing the stock up as a defense AI pure play, often comparing it to a younger, riskier version of Palantir Technologies Inc. (PLTR). On the other, the recent financial reality of a severe Q2 2025 earnings disappointment has been a major gut punch, leading to a dramatic reduction in full-year revenue guidance from $160 million to $180 million down to $125 million to $140 million. This disconnect, where the stock price has stabilized well above its 52-week low of $1.48 despite the fundamental news, forces us to reevaluate the true forces at play. Is this resilience purely speculative trading, or is there a genuine high-conviction bet being placed by sophisticated money? The recent movement in BBai stock has been characterized by extreme volatility and speculative fervor. Looking at the daily swings, we see a dramatic surge in September 2025, with the stock jumping nearly 17% in one session, fueled by unusually heavy call options trading and momentum from a broad AI stock rally. This followed news of new biometric deployments at Nashville International Airport and a strategic defense partnership announced in September concerning the U.S. Navy and the UNITAS 2025 multinational maritime exercise. These are the flashpoints where retail investors, often trading on platforms like Robinhood for fractional shares or executing quick strategies on a more professional setup like Interactive Brokers, rush in, driving volume far above its average. However, the price consolidation and pullback we've seen recently, moving from highs near $7.99 down to the current mid-$7 range, signals profit-taking and a period of digestion following the initial enthusiasm. The institutional movement provides a crucial counterpoint to this retail drama. Despite the revenue concerns, institutional owners increased their long share count by over 10% in the most recent reported quarter, with giants like Vanguard Group Inc. and BlackRock Inc. significantly adding to their positions. This action suggests that major institutions are looking beyond the lumpiness of government contracts and the transient revenue dips caused by what management termed as disruptions in federal contracts from efficiency efforts within the U.S. Army. They are positioning for a long-term strategic win, betting on the company's $380 million revenue backlog and a massive newly raised cash balance of over $390 million. As of June 2025, this record cash gives BigBear.ai the financial muscle for transformative investments and potential M&A, a luxury most smaller, unprofitable AI players do not possess, fundamentally shifting the risk profile. The narrative that BigBear.ai is a company in disarray because of a single revenue miss is profoundly challenged by the fact that Fidelity funds, alongside other massive asset managers utilizing sophisticated strategies across their Fidelity Investments platforms, are actively accumulating the stock. The core business model of BigBear.ai Holdings Inc. is centered on providing a decision intelligence platform that operationalizes artificial intelligence and machine learning at scale. This technology allows customers, predominantly within the U.S. national defense and intelligence communities, to analyze massive data sets and forecast outcomes. The business is split between two main segments: its government sector, which focuses on national security contracts, and its commercial sector, which is being aggressively expanded through acquisitions like Pangiam, focusing on critical infrastructure like airports and supply chains. This heavy reliance on government contracts, while providing a stable, high barrier-to-entry client base, is also the source of the stock's primary volatility. As highlighted by analysts, a huge chunk of the $380 million backlog is unfunded or unexercised, meaning the timing of when these long-term contracts translate into actual revenue can be unpredictable, leading to the lumpy earnings reports that spook the market. The Q 2025 revenue dip of 18% year-over-year was directly attributed to these contract disruptions in certain Army programs. However, the strategic significance of BigBear.ai's technology, particularly its role in providing AI autonomy and battlefield command utility through platforms like Conductoros, positions it to benefit from colossal legislative tailwinds. Specifically, the proposed One Big Beautiful Bill, OB3, with its billions earmarked for the Department of Homeland Security and disruptive defense technology, could act as a multi-year catalyst far outweighing any near-term quarterly shortfall. This is the ultimate reality check for those caught up in the short-term earnings fear. The company has proven products, including its biometric exit solutions at over 25 airports, and its focus on physical AI and IoT integration positions it not just as a contractor, but a critical long-term technology partner to the U.S. government. Comparing BigBear.ai to its peers often brings it into a direct valuation face-off with C3.ai, and the previously mentioned Palantir. While C3.ai is focused on its agentic AI platform for enterprise, and Palantir is the established industry leader with its ontology-driven architecture, BigBear.ai is carving out its niche as a defense and critical infrastructure specialist with an emphasis on decision support and predictive analysis. Its current valuation, with a forward 12-month price-to-sales ratio hovering around 17.8, suggests the stock is richly valued, trading slightly above the industry average and far above the Nasdaq Composite. This valuation requires significant future execution to justify, a fact that is often overlooked by momentum-driven investors accessing the market through online investment tools and basic investing sites. The challenge for BigBear.ai is to smoothly transition from securing pilot programs and smaller contracts to winning larger recurring government contracts that provide predictable, scalable revenue. The recent partnerships, such as the one with SMX for the U.S. Navy and international ventures in the UAE, are crucial proof points in this strategy, suggesting an expansion path that will diversify revenue away from its hyper-reliance on one or two domestic government entities. The future outlook for BigBear.ai hinges entirely on its execution on two key fronts. First, its ability to convert that huge but mostly unfunded backlog into cash-generating projects, which would quickly resolve the revenue volatility issue. And second, the prudent and effective deployment of its massive $391 million cash balance to accelerate both organic innovation and strategic accretive acquisitions. Analysts are generally bullish, with a consensus buy rating and price targets that generally imply limited downside from the current price, though some fair value models place the stock lower, around $5.83, suggesting it is currently overvalued based on near-term financials. This overvaluation reflects the market's expectation of future growth, a premium paid for the company's strategic positioning in the high-growth defense AI sector. The ultimate opportunity lies in the company's push into border biometrics, shipyard logistics, shipyard AI, and other high-priority areas aligned with the massive federal spending outlined in new defense-related bills. If BigBear.ai can demonstrate a clear path to profitability by expanding its gross margin beyond the recent 25% mark and stabilizing its contract flow, the stock could see a significant re-rating, potentially retesting its 52-week high of $10.36. However, the risk of a further guide down or protracted delays in contract funding remains a significant headwind. For those who prefer the steady, guided hand of a Schwab Intelligent Portfolios or a SoFi Invest robo-advisor, this stock's volatility is a major deterrent. It is a high-conviction, self-investing play that requires a deep understanding of federal procurement cycles. As an exercise in market sentiment, comment below how many shares of BigBear.ai, BBai, you currently hold, or if you prefer the relative stability of a blue chip like Apple stock or Nvidia stock in the AI space. In conclusion, the tension in BigBear.ai Holdings Inc. is palpable. The market's high expectation is built on the company's narrative as a defense AI disruptor, a vital cog in the national security machine, and its potential to leverage a massive cash balance for M&A and innovation, placing it in the same conversation as major tech plays like Tesla stock and the AI giants. However, the sobering reality of volatile federal contracts, a disappointing Q2 revenue figure, and a necessary downward revision of guidance serves as a stark reminder of the execution risks inherent in its business model. The current price resilience, driven by strong institutional accumulation from players like Vanguard and BlackRock, suggests that the smart money is betting on the strategic asset, its core AI technology and the future wave of defense spending, rather than the bumpy quarterly reports. For investors, the long-term thesis is a bet on the strategic importance of decision-grade AI. The immediate reality is managing the choppiness of a government contractor. This is not a simple momentum trade. It is a strategic investment in the future of national defense technology, where short-term financial pain is being endured for the potential of monumental long-term contract wins, making it a truly complex study in the expectation versus reality of high-growth technology on the public market. The focus now shifts to the upcoming Q3 earnings report, where any sign of stability in federal contracting or clarity on the use of their